Hello, good morning, trade pros. Welcome to our morning market update for Wednesday, March 21st of 2018. This is George Papazov. Today is a historic day. We have a historic event, Jay Powell's first quarterly Federal Reserve meeting. All right, so this is called the FOMC, Federal Reserve Federal Market Open Committee. They gather on a quarterly basis to issue a statement on economic projections, a decision on interest rates, and an outlook on the economy and the interest rate path going forward. This is an especially big meeting because Janet Yellen left last year, and Fed Powell, or Jerome J. Powell, joined the board himself in February, was nominated officially, and took over the post. So it's going to be very interesting. A lot of traders today think it's all about interest rates, and that's incorrect. And that's what we're going to discuss in today's video. Before I go into the update, I want you guys to notice there's actually a link in the description below explaining the full trajectory of or the full extent to what we expect the Fed to do and say. If you click that link, you'll be able to read all about it. All right, let's start by looking at the market. Let's have a quick overview of where the market went in the last session. So as we could see right now at the moment, futures are as follows. In Asia, Japan is closed for holidays. Hong Kong is down 0.4%. China is down 0.3%. All right, India is up 0.4%. In Europe at midday, London is down 0.4% as well. Paris is down 0.1%. Frankfurt up 0.2%. So overall, we're getting some slight bearish tone in the Asian session and very small and minute bearish tone in the European session. All market traders, all traders, investors, market participants are now waiting for the Federal Reserve at 2 p.m. Eastern today. So what's going to happen at 2 p.m.? We're going to receive the interest rate decision and the FOMC statement, and our algorithms are going to begin to scrutinize it letter by letter, word by word, sentence by sentence. And that's not the time for you to trade. What you do in that situation is you allow the algorithms to battle each other, let the terminators go have a fight with one another. And once the dust settles, you pick up the pieces and get a chance to get back on board. So if the market skyrockets higher, you let it go without you, let the battle happen. On the first dip where you find support and it finding a little bit of a ground or a demand level, you get long back into the direction. I'm not saying fight the robots. I'm saying let the robots fight themselves and you jump on board and go in that direction, but at a smart time to enter. Enter with the smart money today. Trade like you're doing this professionally. Trade like you're taking it serious and it's a business, because you should be, and it is. Futures here in the United States, Dow Jones is flat. S&P is also flat this morning. NASDAQ down 0.3%. Crude oil up 1.1 percentage point on API oil inventory data. Tomorrow, or not tomorrow, yesterday we had oil API inventory at 4:30 p.m. Today at 10:30, we also have the oil inventory numbers from the Department of Energy. These numbers provide you enough opportunity every Wednesday morning at 10:30 to make your entire weekly goal in under an hour or less. So if there's one day you should be trading, this day is it at 10:30. If you guys want to trade with us, join our trading room. If you subscribe to the Day Trader Pro package or the Elite package, you get the inclusion of the live daily trading room, and we're going to be trading that this morning at 10:30 a.m. So hop on over, sign up, give it a shot. You have 14 days of money back, or risk-free period. There's no risk at the end of the day. That's the beauty of what we offer. It's extremely high value. This is information you won't learn anywhere else because it works. The subscription cost is so affordable, you probably pay more watching movies every month. And when's the last time a movie's made you money? All right. So crude oil is up 1.1%, gold is up 0.3%, and Bitcoin up 1.8%. Bitcoin's really interesting because Edward Snowden made a mention that the NSA has been tracking Bitcoin since 2013, including Bitcoin purchases, and they've been following it by using MAC addresses. So that was kind of interesting for me to see. Let's jump into the Fed because we gotta get going here. 10 a.m. we have existing home sales. 10:30 we have the Department of Energy petroleum inventories, which is crude oil inventories, and then 2 p.m. we have the FOMC announcement, and 2:30 p.m. we have the press conference, and that's very important. There's two separate events that you need to watch for. All right, let's talk about what you need to know about the FOMC statement. What is the chance that they're going to raise interest rates? 94.4%. The question is not whether or not they raise interest rates. That's already priced into the market. So first of all, if they do not raise interest rates, that'll be a very chaotic state. The Federal Reserve will not raise interest rates given the fact that we're up to 94.4% odds. Anytime there's anything 70% or above, they're almost 100% going to do it. So interest rates are gone up. That's a foregone conclusion. Up 25 basis points or 0.25% to 1.50 to 1.75. That's the FFR, the federal funds rate. That's pretty much happened, except that the bigger questions that we'd like to know here as traders is, what is the projection of the rate path? So we know that at this point, we're assuming there's going to be 3 rate hikes for 2018, one in March, one maybe in June, one in September, and on the fence for December. For December. All right, that's a really big point to not miss. If it's going to be 3, that's already expected. If we have 4, there's going to be a more hawkish statement, as we say. So equities are going to scurry. Equities are going to hurry along with the US dollar and gold to reprice this information. Under this scenario, if we're more hawkish or higher interest rates, we expect weaker gold, stronger US dollar, and weaker equities. All right, and weaker bonds under this scenario, because yield rates go up, bonds will go down. Bonds will probably react much quicker than equities. When you're trading an FOMC statement event, the assets that move the most are the US dollar and the bonds. Equities are kind of a secondary product. They're a little bit more dicey and choppy to trade with. All right. That's the first question. Will we have 3 rate hikes? Will we have 4? The other question is, how far out, or what will rates look like far out? 2019, 2020. How many FOMC voters will have put their dot above 3%? Right now, when we look at the implied rate, the majority believe in 2020 will be hovering around the 3%. If some of them move higher than that, then guess what? That means that we're probably going to see a more hawkish long-term statement. And right now, the more important part is what the 2018 and 2019 first 2 quarters holds. That's where traders are focusing more so, because of 2020, it's too far out. They could make adjustments at any time. All right, the third thing we're going to be looking for is economic projections. Does the Federal Reserve feel that we should, that economic conditions are so good they justify more rate hikes? So that'd be even more hawkish. And what is their overall sentiment? We'll start with look on GDP. All right, the fourth thing. Maybe the fourth thing already? That might be the fourth thing. The fourth thing we're looking for is inflation. Will the Federal Reserve mention if they're going to increase their inflation target, or if they'll allow the inflation to overshoot their current target of 2%? All right, let's keep it going. The fifth thing is the press conference. How will Jay Powell answer questions? All right, how will he conduct himself? And part of the fifth thing as well is, will Jay Powell announce that these meetings are now going to be done monthly with a live Q&A every single month instead of every quarter? Right now, there's Q&A sessions only in the quarterly meetings. So March, June, September, December. All right, that's the only time there's question and answer period. Usually it's just a statement with no opportunity for the Fed to speak and defend their position. If Jay Powell says we're going to now have a monthly Q&A session, guess what that means, traders? That means that every meeting is what they call live. It's a live meeting. Every meeting could lead to an interest rate hike. The reason you would do that is because you expect to have more hikes. So if they announce a monthly meeting, that in itself is an expectation of hawkishness. When you're trading the stuff, you're not looking for Jay Powell to come out and say, we're going to have 4 rate hikes. That's too easy. You're expecting to read between the lines to put that together. That's why this is so difficult. Here's what I'm going to tell you. Trading FOMC meeting minutes is speculative at best. Good traders do really good on this report because there's volatility. Newer traders get diced up, sliced up, and ginsued into pieces. So be very careful on how you approach the situation. Manage your risk. If you're going to trade it live, trade it with less contract size and less frequency. Just don't get chopped up. It's only one day. All right. Wouldn't it be terrible for you to get chopped up on a day with all the news is, and then the next day the trend follows through nice and smoothly and you don't have money to be on board? It would. It wouldn't be good. All right. That's kind of the Federal Reserve in a lot of detail. I mean, there's a lot more I could tell you how each federal speaker has changed their tone over the last couple months. If any doves have flipped to hawkish voters, dissenters, you go so deep into this, trust me, you don't want to. All right. We also posted the blog on our website. Check that out. The big time and the big day is today. The big time is 2 p.m. Eastern and also 10:30 a.m. Eastern for oil. That's kind of what I got for you guys. So if you have any questions, please pop them in the questions box below. Please like, comment, share, and subscribe to our channel. We got a lot of awesome content coming your way. And this is the kind of great info that we put out. We get you prepared for key events, and we get you prepared to trade yourself because we do ourselves as well. You guys have yourself a great day. I'm going to open up the trading room, do some more analysis with the team here, the subscription team, and draw some levels. We're going to tackle the market together. I think at TradePro Academy, we have the best online community, period, hands down. Doesn't have to be in trading, in anything. The best online community, and I love those guys. I'm going to go be with them, guys and gals. You guys take care on YouTube. See you tomorrow morning at 9 a.m. Trade careful this Fed meeting. It has the opportunity to give you a lot of profit, but it could also be choppy and dicey as markets settle in. You need to trade around people with experience during moments like this. You guys have a great day. Good luck. Manage your risk, trade like a trade pro, and see you tomorrow at 9 a.m. Take care. Goodbye.